Hey, this is Chris. Now, as a new parent, one of the books I think all parents are encouraged to read when they have a kid or just before they have a kid is What to Expect When You're Expecting. And so in this video, I'm going to be doing what to expect before you start investing, because we have got a lot of clients that are investing with us for the first time every year, and we like to help guide them as to what they should expect over their first 6 months as an investor. And so here are the 4 things that we think you should be looking out for and expecting. So first of all, one of the things we notice a lot of newbie investors want to do is check their balance every day. Particularly if you haven't invested before and you're not used to owning something that goes up and down in value every day, it can be extremely tempting to want to log in to your Stockspot app or to your dashboard to check on the performance of your portfolio. Look, it's fine, it's something you can do, but I would say that the more you check it, the more nervous and the more concerned you're likely to be, because values do go up and down every day, and actually there's no benefit to checking this every day. Really investing should be boring, as we say at Stockspot. Boring is brilliant. It should be like watching grass grow, and it shouldn't be something you really need to do daily. So if you can, try not to log in so often. We certainly see clients that log in less often are the ones that tend to do better. They're less nervous. They're more confident to invest through ups and downs. So try and keep it to weekly or every couple of weeks if possible. Otherwise you'll become infatuated with it, and it's probably not a healthy thing to happen. So the second thing is, at some point in your first 6 months of investing, you're going to see a negative return. Now, it's almost inevitable that an investor at some point in time will see a negative return, just because markets are always going up and down, and it's very unlikely that you'll invest perfectly at the very bottom day before an upswing. So at some point in time, people see a negative return. That might last a week, it might last a month, it might last 6 months. I mean, all of them are actually perfectly normal. Negative returns are just part of investing, and actually that's why we ask clients when they sign up about their investment horizon, because we want to make sure that your portfolio is going to give you a great chance of a positive return over your time horizon. And none of our clients are signing up saying they want to invest for 2 months or 3 months, and if they do, we actually tell them investing isn't appropriate. If you're investing for 3, 4, 5, 6 or 10 years, you don't need to worry about having a negative return over the first few months or the first 6 months even, or even the first year. It's something that is very normal, and actually that's exactly why our product is designed to capture your time horizon and make sure you're in the right strategy. So that's number 2. So number 3 is we often get asked questions around people's portfolios where some assets have gone up and some have gone down. So in our core portfolios, we have 5 different assets in there, and it's totally normal over a period of a few months or even a year to see some have gone up and some have gone down. That doesn't mean that you should be selling the ones that have gone down or buying more of the ones that have gone up. Actually, all that tells you is that diversification, or spreading your money out, is actually working perfectly. You should actually be hoping that some investments are going up and some are going down, because that actually helps to give your portfolio a smoother ride over time. So don't be concerned if you think some are going up and some are going down and you're worried that you shouldn't be owning the things that are going down. They will come back at some point. It's just a part of market cycles that some assets are going up and some are going down at any point in time, and it's a design of our product that we include all of those assets, because we're not trying to predict what's going to go up next week or next month. We basically accept that the future is unknowable, and really you need to own all assets in a diversified portfolio. That's number 3. Finally, something you will see as an investor over your first few months is distributions. So these are cash payments that come into your account. If you own shares like BHP and Commonwealth Bank, they're known as dividends. With ETFs, they're known as distributions. So with a distribution, if you're earning a distribution from your ASX 300 ETF, it's actually a combination of all of the dividends that have been paid from all of those companies over the last quarter. It's awesome. You're going to get some cash in your account. Then later on in the tax year, on our statement that we provide you, we're going to also tell you about some franking credits and other types of return that you can claim back from the tax office. Is there anything you need to do about your distribution? No. It will either sit in your bank account for a while, or we'll reinvest it depending on how much you earn, and then we'll use that amount to reinvest to rebalance your portfolio, or to make sure that the different assets in there have the right percentages that keep your portfolio balanced and on track to reach your goals over the long run. So look out for distributions. We've got a calendar inside the dashboard that can let you know which ones are coming up soon. and then they'll pop into your account on a certain day. Yeah, that's a big part of the return you're going to earn. What we've seen over time is that investors in Stockspot earn both a capital return, so the ETF's rising in price, as well as a distribution return. Both of them are important. So even in periods where you might see the prices going up or down, be confident to know that there are always going to be these distributions that are coming through to you every quarter. And it's one of the big benefits of investing in an ETF is that you don't have to manage all of the administration of earning dividends from lots and lots of different banks and companies and BHP and Commonwealth Bank, and then work out your tax. It all gets combined into a single distribution. Then we sort out all of the tax stuff for you to make it really simple to give a statement to your tax advisor or accountant, or do your own tax on MyTax. So therefore, things to look out for in your first few months, and things that you should absolutely be expecting as a first-time investor in Stockspot.